Bitcoin falls below $70,000, triggering broad crypto market turmoil. February 5th, 2026, Markets Desk. Bitcoin, the world's largest cryptocurrency, plunged below the critical $70,000 mark on Thursday, marking its lowest trading level since late 2024 and igniting a widespread sell-off across the digital asset market. The sharp move lower intensified ongoing volatility that has gripped the asset class in recent weeks, erasing a large portion of last year's gains and shaking confidence among investors large and small. At its trough, Bitcoin traded near $66,675, down more than 40% from its October 2025 peak and marking a steep year-to-date decline. Analysts point to a confluence of factors driving the drop, from macroeconomic headwinds tied to weakening risk appetite in global markets, to heavy institutional liquidations and technical selling that triggered automated position closures on major exchanges. Market context, risk aversion, and macro pressures. Thursday's sell-off unfolded against a backdrop of broader market weakness. Global technology stocks, long intertwined with speculative and growth sectors, slid sharply, pushing investors away from risk assets into cash and defensive positions. Bitcoin's fall was also compounded by pressure in precious metals and key commodities, indicating that sentiment was deteriorating across multiple markets. Silver, for instance, plunged dramatically over the same period, underscoring investors' reallocation away from higher volatility assets. At the same time, political and regulatory uncertainty appears to have weighed on crypto sentiment. The market's earlier post-election optimism following President Trump's return to the White House has faded, with stalled legislation and debates over stablecoin frameworks, leaving traders cautious. Institutional selling and liquidations amplify downtrend. Heavy outflows from institutional products such as spot Bitcoin exchange-traded funds have been reported, removing an important bid from the market at a crucial juncture. According to aggregated market data, billions of dollars in leveraged crypto positions have been unwound, contributing to price acceleration on the downside. Margin and futures markets have seen elevated liquidation activity, particularly among long positions, signaling that forced selling, rather than patient accumulation, has been a major factor in the decline. Some traders on social platforms and derivatives analytics screens have highlighted total liquidation events exceeding several $100 million within recent trading sessions. Market sentiment indicators have fallen toward extreme fear levels, reflecting widespread anxiety across retail and professional investor cohorts. Global market impact, broader losses in crypto valuation. The broader cryptocurrency ecosystem has not been spared. According to market watcher Reuters, the total crypto market shed an estimated $2 trillion in value since its peak, as Bitcoin's slide cascaded into other tokens and reduced overall capitalization significantly. The downturn has also fed into traditional markets, with retail trading platforms, crypto-linked equities, and blockchain-oriented firms posting steep declines as broader risk aversion took hold. Altcoin carnage. Ethereum, Solana, Tron, and XRP weighed down. Bitcoin's slump rippled quickly through the altcoin market, erasing gains and amplifying losses across several key digital assets, a common dynamic in risk-off environments. Ethereum, ET. Ethereum, the largest altcoin and the backbone of decentralized finance and smart contract activity, saw notable losses on Thursday. Reports indicate ETH prices fell sharply alongside Bitcoin, with declines of roughly around 7% in recent trading sessions. The sell-off in Ethereum was exacerbated by investor liquidations and outflows from ETH-based exchange-traded products, which have seen negative flows on several recent sessions. Solana SOL. Solana, often considered a high-beta crypto asset due to its strong retail engagement and fast transaction throughput, experienced outsized volatility. Market data showed SOL dropping sharply as speculative capital exited risk positions, adding to broader losses among Layer 1 networks in the wake of Bitcoin's break. Tron TRX. Tron, known for stablecoin settlement and decentralized applications, was not immune. Although less susceptible to momentum swings than more speculative tokens, TRX also fell as overall liquidity in the crypto market tightened. Lower price levels in Bitcoin often trigger sell pressure across correlated assets like Tron, demonstrating the interconnected nature of market breadth in downturns. XRP stands out among major altcoins for its price action. The token showed some of the steeper relative declines, with prices falling more than single-digit percentages amidst the broader sell-off. Unlike some networks that may decouple in certain market regimes, XRP has historically shown strong correlation with broader crypto declines during sharp risk-off moves. Market psychology and technical considerations. Technical traders have pointed to the breach of critical psychological and support levels as a pivot point for sentiment. The break below $70,000, a key floor held throughout late 2025, is widely viewed as shifting the narrative from corrective to potentially structural weakness. Some analysts warn of further declines if Bitcoin fails to reclaim key zones in the coming days, while others caution that price swings may remain choppy as market participants assess risk in a broader macro context. Bitcoin's volatility has spiked, with implied volatility metrics and derivatives skew reflecting elevated uncertainty. Funding rates in perpetual futures have turned negative, suggesting short-term bearish bias across leveraged traders. What this means for investors and markets. For institutional and retail investors alike, this phase represents a significant test of conviction. Long-term hodlers, may view the reset as an opportunity to accumulate or average into positions, while short-term traders grapple with heightened swings and liquidity risk. Macro traders point to broader risk dynamics, including central bank policy expectations, equity market performance, and currency strength as key drivers that could continue to influence crypto price action. Several market strategists have highlighted that until inflation expectations, monetary policy clarity, and risk sentiment stabilize, cryptocurrencies may remain susceptible to outsized moves in either direction. Conclusion: a market in transition. Bitcoin's fall below $70,000 is more than a price statistic. It represents a critical inflection in the market's narrative. The sharp decline challenges earlier assumptions about price resilience and underscores how closely digital assets are now tied to macroeconomic and institutional flows. The ripples felt across Ethereum, Solana, Tron, XRP, and broader crypto capitalization reflect a market in transition, one that must contend with shifting investor psychology, liquidity pressures, and the complex interplay of risk assets in a rapidly evolving financial landscape. As traders and institutions reassess positions, the weeks ahead will be closely watched for signs of stabilization or deeper structural correction. Have a lovely day and subscribe for more news that impacts you and your world.